Hi there, welcome to Market Call. We have the outspoken, always insightful John O'Connell on the show today, Chairman and CEO at Davis Ray, and he's taking your questions on US large caps. There's the number, 1-855-326-6266, Market Call at BNN Bloomberg.ca. Great to see you. Thanks for joining us.
Appreciate it.
So it's been 2 lush, soft years in the US equity market. Do you think people are too optimistic we're going to get another one?
I think, yes, we were. We're burning off a little bit of that optimism. I think we could certainly burn off a little bit more. There's a lot of uncertainties in the world. There always are. But when valuations have been pushed, optimism is high, and you have building uncertainty, particularly around a new administration that's coming in. Governments continue to spend massive sums of money. The U.S. government has a budget deficit of 6% of GDP, which is almost twice what Canada's is, for example. Interest rates that are rising since the Federal Reserve Board has lowered rates. So you're getting competing forces here, potentially looming trade wars. The Biden administration entering these terms that could restrict even further the technological transfer, the use of chips in China. Mm-hmm. At some point, we don't know what the new incoming administration is going to say about that, but we do know that there's a lot of China hawks all around. Whether this is sound policy for America longer term or not is a big, big question. But you certainly also have to wonder whether two things. One, does this start to pile up on the big companies like the NVIDIAs of the world that are holding, and the Apples of the world? Apple's a large exporter out of China. The Chinese government has introduced export control rules in the past. Does China ever lash out at America in retaliation by restricting the export of Apple phones from China? So I'm not saying that's going to happen, but it could happen. And with Apple trading, 30 times earnings, not growing, overly optimistic about its rollout of Apple AI and all that kind of stuff, which is, I think Steve Jobs must be, rolling in his grave. I just think there's a lot of risks, and I think investors have taken too much of an optimistic bent, and that tends to lead people to be disappointed if things don't work out according to plan. And so I just think there's issues out there.
So there's reason to be cautious about the U.S. market anyway now.
I think there's reason to be cautious about most markets. And it's not, everybody says, well, it's because it's the big tech stocks that have rallied. But if you look at those companies, they still are the most profitable companies in the world. In some cases, their profitability is being restricted by the massive amounts of money that they're spending on NVIDIA chips and computer centers and those kinds of things. There's a lot of people went into the Russell 2000. People were rooting around looking for things to buy and sell to try to make money because people were getting greedy. And greed sort of seeps into the environment. The Russell 2000 is probably down by 10% now. So we are burning off some of the excess, but generally speaking, I think there's room for a little bit more.
John, we're really glad to have you here. John O'Connell, Chairman and CEO of Davis Ray, taking your questions on US large caps. 1-855-326-6266.